If I told you the US dollar was being murdered on purpose, most people would laugh and scroll away. They'd call it conspiracy, paranoia, exaggeration, and for years that reaction made sense. But look at the chart right now. We are watching a currency slide to levels not seen in 4 years. Not during a sudden panic or an emergency collapse, not because of an once-in-a-century event, but slowly, methodically, in plain sight. Today, markets took another shock. After a historic rally where gold surged toward levels that shocked markets, traders dumped the yellow metal and the price fell sharply below that psychological mark, all because of a political and monetary move that's bigger than most people understand. The headlines tell you it's about Fed policy uncertainty, a new Federal Reserve Chair nominee, or profit-taking. They'll talk about short-term technical swings, but strip away the surface chatter and look at the incentives, the timing, and something feels off. This doesn't look like a system trying to protect the dollar. It looks like a system that's letting it weaken. At the same time, we are openly being told the future of money is digital, programmable, centrally controlled. Not in some distant decade, but right now. And standing in the way of that shift is an asset the old monetary regime has never been able to fully suppress: gold. Now, look at where this really starts. Right now, the US dollar is weakening even as confidence should be defended at all costs. Inflation still bites, debt is still climbing, and yet the dollar index has slid to multi-year lows even with political leaders publicly claiming the opposite. The Federal Reserve is under political pressure. Markets thought they knew which direction the Fed would go, but today's announcement of a new nominee pushed markets into chaos, strengthening the dollar just long enough to send gold crashing. But let me ask you this, why would a system that's supposedly trying to prop up the dollar allow it to be weakened so dramatically on the global stage? Because a weaker dollar forces people to look elsewhere, and when people feel that pressure long enough, they start looking for something else. That's exactly what we saw, not just in the rise of gold over the last month, but in how markets reacted when the dollar briefly strengthened. Gold didn't collapse because trust in gold disappeared. It stumbled because the narrative shifted momentarily, and that tells you something deeper. Investors don't buy gold because it's trendy. They buy it when they stop trusting the money system itself. And that's exactly what's been happening. Escalating geopolitical risks, economic instability, and political pressure on central banks are pushing people out of paper assets and into hard real assets. Now hear what most people miss. Across the world, central banks are not hiding their intentions anymore. Digital money is not a whisper, it's being built right in front of us. Payment rails are being redesigned, tokenized settlement systems are being introduced, stablecoins are being regulated, and all the while the dollar is weakening and gold is acting unstoppable when it wants to be. So let me ask you the most important question of this entire story. How do you convince an entire population to accept a new monetary system? You don't do it when things feel stable. You do it when the old system feels broken. That's not speculation. That's history. No population willingly gives up a trusted system. But when trust erodes, when money stops working the way people expect, when savings feel unsafe and prices feel uncontrollable, people become open to solutions they would have rejected before. Whether this is incompetence or intention no longer matters. The outcome is the same. A weakening dollar, a public losing confidence, and a digital alternative being positioned as the answer. Before we continue, if you've been following this channel, you know I don't waste your time with hype or guesswork. I focus on research, real insights, and tools that can actually help investors. That's why I've partnered with The Motley Fool, one of the most trusted names in the investing world for over 20 years. You'll find my link in the description. It's the easiest way to check them out and see what they offer. That link also gives you access to special deals or discounts they have available right now. And yes, it helps support the channel too. Now let's get back to the video. Think about that. If the goal was to protect the dollar, you'd see different policy, one that prioritizes purchasing power, that defends the value of savings, and that treats debt as a threat, not a tool. Instead, what we see is tolerance, even comfort, with weakness. While the average person watches prices creep higher and real wages stagnate, large pools of capital quietly reposition into assets that cannot be printed, frozen, or reprogrammed. Gold doesn't require permission. It doesn't rely on trust in an issuer. That's why this matters now. Gold isn't crashing because the idea died. It's crashing because control mechanism flashed their strongest signal yet. But that signal reveals the fear beneath it. Fear that the old system is breaking. And when trust breaks, systems change. And that's the part no one wants to say out loud. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.